Imagine getting the keys to your dream home, your kids squealing with excitement as they race to pick their rooms. Sounds amazing, right? But for many single moms, this feels like a distant fantasy. Well, not anymore. Today, we're cracking open the vault of mortgage secrets lenders don't want you to know. Buckle up, because your path to homeownership is about to get a whole lot clearer and more exciting. Did you know that single moms are often prime candidates for special mortgage programs? It's true, lenders are practically tripping over themselves to work with responsible, motivated buyers like you. But here's the kicker. They're not always upfront about these golden opportunities. Why? Because informed borrowers might just snag a better deal. And we can't have that, can we? Well, too bad for them, because we're about to spill the beans on everything from down payment assistance to credit score hacks. By the end of this video, you'll be armed with insider knowledge that'll make lenders sweat. First things first. Let's talk about the FHA loan. This little gem is a single mom's best friend. With down payments as low as 3% and more forgiving credit requirements, it's like the fairy godmother of mortgages. But wait, there's more. If your credit score is 580 or higher, you're in the sweet spot. Below that, don't worry, you might still qualify with a 10% down payment. Not too shabby, right? Now, let's address the elephant in the room, the down payment. It's the biggest hurdle for many single moms. But what if I told you there are programs that can help you clear that hurdle with ease? Enter down payment assistance programs. These magical entities can provide grants or low-interest loans to cover your down payment. Some even offer forgivable loans. That's free money. But here's the secret sauce. Many of these programs are specifically designed for single parents. It's like they rolled out the red carpet just for you. Now, let's talk credit scores. They're not the be-all and end-all, but they do matter. The good news? You don't need a perfect score to get a mortgage. In fact, some programs accept scores as low as 500. Here's a pro tip. If your score needs a boost, become an authorized user on someone else's credit card. Just make sure they have a stellar payment history. It's like hitching a ride on their credit coattails. Now, let's dive into the world of conventional loans. These bad boys typically require a higher credit score and down payment, but they come with perks like lower mortgage insurance and better interest rates. Here's the scoop. If you can swing a 20% down payment, you'll avoid private mortgage insurance altogether. That's more money in your pocket each month. But don't let that 20% figure scare you off. Some conventional loans accept down payments as low as 3%. Now, let's talk about a hidden gem, the USDA loan. No, it's not just for farmers. If you're willing to live in a rural or suburban area, you could snag a zero down payment loan. That's right, zero. But here's the catch. There are income limits. However, they're often higher than you might think, especially for single parents. It's worth checking out. You might be pleasantly surprised. Now, let's address the VA loan. If you're a veteran or active duty service member, this is your golden ticket. Zero down payment, no mortgage insurance, and competitive rates. It's like the mortgage gods are smiling down on you. But what if none of these options quite fit the bill? Don't throw in the towel just yet. There's still the option of an adjustable rate mortgage. ARMs start with a lower interest rate that adjusts over time. It's like a mortgage that grows up with you. If you're planning to move or refinance in a few years, this could be your ticket to homeownership. Now, let's talk about a secret weapon in your mortgage arsenal, mortgage brokers. These folks are like personal shoppers for home loans. They can access a wide range of lenders and find the best fit for your unique situation. But here's the kicker. Not all mortgage brokers are created equal. Look for one who specializes in working with single mothers. They'll know all the insider tricks to get you the best deal. Speaking of deals, let's chat about interest rates. They can make or break your mortgage payment. But did you know you can negotiate your rate? It's true. Don't be afraid to shop around and pit lenders against each other. Now, let's address the elephant in the room. Debt-to-income ratio. Lenders love to harp about this, but here's what they don't tell you. There are ways to improve it without paying off all your debt. One sneaky trick? Ask for a raise at work. Even a small bump in income can significantly improve your debt-to-income ratio. It's like giving your mortgage application a secret power-up. But what if a raise isn't in the cards? Don't worry, we've got another ace up our sleeve. Side hustles. From freelancing to dog walking, there are countless ways to boost your income and impress lenders. Now, let's talk about an often overlooked aspect of mortgages, closing costs. These sneaky fees can add up fast. But here's a secret, you can negotiate them. Ask the seller to cover some of the closing costs. It's not uncommon, especially in a buyer's market. It's like getting a discount on your dream home. Who doesn't love that? But what if the seller isn't budging? Don't fret. Some lenders offer no closing cost mortgages. The catch? You'll typically pay a higher interest rate. But for some buyers, it's worth it to keep more cash in their pocket up front. Now, let's address a common concern: job stability. Lenders love to see a steady employment history. But what if you're new to your job, or thinking of switching careers? Here's the inside scoop. Many lenders only require that you've been in your current job for a few months. Some even consider future income if you have an offer letter. It's like they're betting on your future success. But what if you're self-employed? Don't worry, you're not out of the game. You'll typically need 2 years of tax returns, but some lenders are more flexible. It's all about finding the right match. Now, let's talk about a secret weapon in your home buying arsenal: homebuyer education courses. Many lenders offer discounts or perks if you complete one of these courses. But here's the real beauty. These courses arm you with knowledge. You'll learn about the home buying process, budgeting, and how to avoid common pitfalls. It's like having a cheat code for the game of homeownership. Speaking of cheat codes, let's discuss PMI, private mortgage insurance. It's the bane of many homebuyers' existence. But did you know there are ways to avoid or minimize it? One option: piggyback loans. You take out 2 loans, one for 80% of the home's value, and a smaller one for the remaining amount. It's like divide and conquer, mortgage style. But what if you're stuck with PMI? Don't despair. You can usually cancel it once you reach 20% equity in your home. Some lenders even allow you to cancel it earlier if your home's value has increased. Now, let's talk about a secret weapon in your mortgage arsenal: mortgage credit certificates. These babies can provide a tax credit of up to $2,000 per year. But here's the catch: not all states offer them, and there are income limits. However, for those who qualify, it can be a game changer. Speaking of finding money, let's discuss cash reserves. Many lenders want to see that you have money left over after closing. But here's a secret: gift funds can often count towards these reserves. So don't be shy about accepting help from family or friends. Just make sure to document everything properly. It's like having a financial safety net, and lenders love that. Now, let's address a common fear: the dreaded mortgage application. It can feel like you're bearing your financial soul. But here's the truth: lenders aren't looking for perfection. They want to see that you're responsible with your money. So don't panic if you have a few late payments in your past. It's more about the overall picture. Think of it like a financial selfie. It's all about your best angle. But what if your financial picture isn't quite Instagram worthy yet? Consider a co-signer. This could be a parent, sibling, or even a close friend. It's like having a financial wingman to boost your mortgage mojo. So there you have it, single moms. The insider's guide to navigating the mortgage maze. Armed with this knowledge, you're ready to take on those lenders and score the best deal possible.